My name is Gareth Soloway, and I was a losing trader until I mastered technical analysis. Logic and charts beat hype and narratives every time. Now I teach investors the same techniques that made me a multi-millionaire. This is my trading game plan. Good morning, everybody. Welcome to my trading game plan. My name is Gareth Soloway, Chief Market Strategist here at VerifiedInvesting.com. So as always, we're going to get into the charts, no BS. We're talking about a market this morning that had a pretty good rally yesterday, is up slightly this morning going into the open. Yesterday, the catalyst was the semiconductors, but there were cracks that really popped up late in the day. For instance, did you guys see the drop on Nvidia late in the day? It collapsed down like $6 in the final 20 minutes of the day. Huge sell. And again, that to me continues to be a warning sign. I'm still in the camp, folks, and I showed you this yesterday. I'll show you it again. I think the semis are topping or have topped already for this cycle. And I know no one else out there is willing to make that judgment or go out on a limb. You guys know, if you followed me, I am not shy about giving predictions based on technical analysis and probability. Let's dive into the charts. Here we go. The S&P futures right here. This was yesterday's price action. We opened, we had this big move to the upside, and then late in the day, look at that bring back on the market or check back. Overnight, we kind of trade choppy to lower. This morning, again, early by about 4 in the morning, markets caught a bid. Now we're seeing a little bit of a minor sell-off. If we look at where we were per the close yesterday, this is where we closed. So we can see we are up slightly on the day, about 10 points on the S&P 500. All right, flipping over to the S&P 500 daily chart. Again, we're still dangling right at the high end of that parallel. The weekly chart is really what shows it much, much better. Look at the beauty of this chart, folks. And again, I marvel at this because it's just so shocking. After 26 plus years, nearing 27 years of charting in my trading career, it's still amazing to me how lows and highs can map out so perfectly. And again, here's your COVID low right down here, right? So you have your COVID low, your bear market lows, subsequent lows after that. And then, of course, our liberation sell-off low right there, and the bull market high of 2021. And where are we right now? We're right into that. And notice the markets are starting to struggle just a little bit. Impressive rally from the lows in April. But again, we are coming into, or we are at a pivotal level on the S&P. This is, to me, again, the make or break level for this market. If we get above this, and let's say we have a weekly close with confirmation above this level, then honestly, we melt up into the end of the year. But again, what we're seeing right now on the chart tells us that we could have a correction in store, maybe 5%, 10% into year end if this level holds. We'll have to watch and see where it is. All right, let's flip over to the SMH. This is why I think the semis have topped. And again, if you're new to me, then this may not be something you've seen before. If you've watched me this week, then you know exactly what I'm going to do. We take our highest differential. This is your weekly 200 moving average. All right, weekly 200 moving average. We're on the weekly VanEck Semiconductor ETF. We take that trend line, the moving average, to the highest pivot point right here, and it is, again, 102%. If we go over here, we take the highest point or the highest differential, we go up, again, 102%, and then the last week's high on the semis, how far was it? 102% away. And so the idea is it's like a rubber band, right? It stretches, it stretches, it stretches, and it seems to get into this range about 102% away from that 200 moving average, right? 200 moving average, 200 moving average, and then the rubber band snaps back, and the idea here is that's what I think we're starting on in terms of a retrace. Now, are we going to go right back to the 200? Well, I think eventually, yeah. But where is the 200 at that point? But in the very least, I think we at least correct to the former all-time high here before we have that bigger drawdown. All right. So again, that chart to me is the one that tells me the semis, again, have a pretty solid chance of topping out or have topped out already. Incredible. Also, keep in mind, I mean, we just talk about vertical moves here. If we look at this, I mean, this was to the high 119% move to the upside from the lows of just April. That's an incredible move in any market atmosphere. All right. So again, we've looked at the S&P. We've looked at the semi ETF, the semiconductors as a group. Now I want to dive into a few other things. Number one, Nvidia. This was the intraday. We're on the intraday 10-minute chart. So this is during market hours yesterday, tick for tick, essentially. All right, look at the sell-off in Nvidia yesterday into the end of the day. It's getting a little bit of a bounce this morning. You'd see the pre-market note here. But again, this is pretty remarkable to see a company that is valued at $5 trillion get a sell-off like that in the final basically 30, 40 minutes of the day. So that caught my attention. We did have Qualcomm and ARM Holdings earnings after the bell. We'll go over that in just 1 second. Before we do, yesterday I predicted the dollar would pull back today. Let's take a look at the daily chart on the dollar, and the dollar is doing just that. This is something, what I love about this, folks, is, again, listen, I'm far from perfect in my projections, my forecasts, but what I do say and what you guys can verify is that it's probability based, and I have a highly probable chance of being correct, right? Basically, I look at it as 75%. 3 out of every 4 calls I make, generally in my history of trading, have been correct. This is just an example because it's technical, right? So what we had yesterday, we had a time count. I even said this. You can always verify in the previous day's game plan. 1, 2, 3, 4, 5, 6. And I said, okay, guys, 7th candle, we're going to get a pullback, and the dollar is doing just that. But it wasn't just the time count. It was the fact that we were into this level right here. This is a major resistance level going all the way back to 2023. And so you had a time count, which tells us a reversal is likely coming in. In addition, a secondary factor was that we had entered this resistance zone. Then you even got a doji yesterday, which is even more indicator of a pullback, and that's exactly what we've gotten today. So again, notice again, it's all about pieces of the puzzle. You have one piece of the puzzle, you get to like 65% success rate, right? You have 2 factors or 2 pieces of the puzzle, it becomes more clear. The odds start to increase. You have 3 factors, now you're up at like 75, 80% success rate on your analysis. And again, it's all about leaving the emotion behind and focusing on logic, discipline, and charts. And that's really what it is. Again, it's something that, listen, I can teach anyone to read a chart. I can't teach someone to be disciplined, right? That has to come from within. All right, let's keep going. Qualcomm earnings yesterday after the bell. Qualcomm, again, sold off into the end of the day. This was yesterday's price action, so it was pretty much just rallying on the hopes of good earnings. It did fall a little bit into the end of the day. After hours, it cratered more. Then it slowly has floated back up, but notice we're starting to sell again. Qualcomm right now is set for a small gap lower on the charts. Not a big gap down, just a small gap. All right. But again, nonetheless, it is looking to open lower on the day. ARM Holdings, another semiconductor trader or trading company. We had earnings yesterday on ARM. If we go to the daily chart here, you can see going into earnings on the last week or two, this thing came down from 183 to close yesterday at 160. It's trading at 163.77. So it is up, but it's about as minor of a move up as can be. Very minor gains here on ARM Holdings. All right. So generally, I would rate today's semiconductors as neutral to maybe slightly bearish based on ARM Holdings as well as Qualcomm, both chip stocks. Then throw in that late day sell-off on Nvidia. Something's going on here, guys. Something is going on, in my humble opinion. All right. Next up, we have APP falling, or at least up on earnings, but it is falling on the 10-minute chart. This is, again, the intraday chart. Remember, when we look at earnings, guys, I always look at the intraday first because we want to see the kind of the ups and downs. And we want to see, is it up or down? Is it up significantly? If it's up significantly, we want to look for a trade on the daily chart, right? We go to the daily chart. Down significantly, we look at a trade on the daily chart. But you start on the intraday to get a sense. You have to kind of look at how it traded because sometimes stocks will just pop initially in the first second and then go right down. It looks like, you want to see that kind of price action. All right, so here we have APP, AppLovin. AppLovin is trading decently higher on the day, although starting to come in already here. And again, what we're looking at on APP is a gap higher of about $30, which is about 5 to 6%. If we look at the daily chart, this was going to be resistance. These were my levels. By the way, going into these earnings of these companies, I usually scope out my trading levels for even after hours. So like, let's say APP shot higher. Where was I going to short it? Double top, right? So this would have taken a massive move up, almost 20%, but this stock has done that before. But if it got up here after hours, I was going to short it. And then on a fall, you have a pivot high here and a gap fill here. I had my level already isolated down. Now, if we look at the intraday again, you can see that it didn't get it. Listen, the highest it got was 674. The lowest it got was 607. So it didn't even come close to my trading levels. And you can see again, it closed yesterday around 617. So I guess it's up about $35 in the after hours here or in the pre-market, but it's right into this area here. Now, for aggressive traders, maybe that's a level that you would consider trading it at. I'm not going to. Again, pre-market, it's been above here. It's currently trading. We just looked at the price action. So when it was up here intraday, it was even above that level. I mean, it's fallen $20, folks, $20 just in the last 30, 40 minutes on this stock. Okay. So again, where would I trade this? If you're aggressive, I think this would be the starting point. See these lows right here? Let me zoom in on this. So this candle low basically matches these lows here. So that would be your first level at 684-ish. And then if you really played it safe, double top would be your level right there. But I might, there's a potential for a nibble here at 683 or 684. But again, that's more aggressive versus this would be just sitting back and saying, okay, there's a small percentage chance it gets up there. If it does, that's a higher percentage trade for a day trade. All right. On the downside, if this dumps out, I would still look at this area down here as a major technical zone. DoorDash. Now, DoorDash is getting crushed down 11 to 12% today. Now, this is the kicker, guys. DoorDash is falling sharply. Should any of us be surprised at this? Like, think about Chipotle, Kava. Both of them reported earnings. They lowered guidance, and they said that if you're in the generation Z, Y, basically the end of the alphabet, you can't even afford to go to fast casual anymore. All right. So what do we see DoorDash being used? Is DoorDash used by a 70-year-old grandmother? Not really, right? It's younger generations. So if they're struggling to actually afford Chipotle or Kava or even McDonald's, do we really think that they're paying the extra money for DoorDash? I doubt it. And again, that's what I'm honestly a little annoyed at myself. I didn't put two and two together ahead of time because this would have been an easy short to play. Just the nature of the beast. I'm human. I don't think of every little angle in the market. But again, beautiful dump. It has come back a little bit, trading at 211 after closing yesterday around 238. If we go to our daily chart, all right, daily chart, there's going to be some support right around the 200 even number. I would potentially be interested with that even number. And then there's a level here at 177 that starts to look. Notice all this sideways chop. So again, if we talk about, getting into some zones, if you will, I would say somewhere right in this area, right? So you get all of these kind of pivot lows in the mix here and this little high consolidation. But again, aggressive traders around the 200 even number. Safer traders are going to look at around 177, 178 area right in there. On a positive note, Snapchat again has kind of been, if we look at the daily chart on Snapchat, was it at all-time highs? Let me zoom out. Nope, not really. Not even close to all-time highs. And so remember, folks, when a company reports earnings and it's already been beaten down, expectations are really, really, really low. When a company's at all-time highs, like AMD was going into earnings, or some of these other semiconductors, even Palantir going into earnings made a new all-time high. And what did it do? It fell like $18 on the back of earnings. It wasn't because they reported poor earnings. They beat revenue, they beat guidance, they raised guidance, they beat revenue and earnings. It's that the expectations were so high that it almost made it impossible for them to go up even and, go continue to rally in the stock. So just keep that in mind, is I often look at where the chart is relative to where it's been as an indicator of how easy it is for a company to continue to go up. Versus when you read on social media is going to tell you that something that's at all-time highs is just going to go up forever. Be very skeptical. It's why charts are key. And honestly, we get rid of the BS, get rid of the social media, focus on the charts. That is the answer, at least in my opinion. Not the perfect solution. There's nothing there, but ultimately it gets you to a high percentage win rate. All right, flipping over to gold, guys. Gold is eking out a small gain today. It just continues to hover around this first target that I gave. Again, we did achieve it, but now it's as much as a week old since we tagged that low there, and we've just been going sideways. Now, for me, the thing that I'm seeing is I'm seeing this pattern, right? Down move and then sideways like this. So to me, down move like this, that's a bear flag. And so for me, at least, I'm still remaining bearish on gold in the near term. Long term, I'm still holding my long term gold, guys. I've still got my long term gold. I still think it's going to 5, 6, 7, 8, 9,000, potentially even higher, right? But in the near term, I still think there's downside. And so I will wait patiently for swing trade levels. I'd consider starting a swing here and then adding and really going aggressively at this level. If we get down to it, we may not, but I think at least we probably test this 36.95 level on gold. Let's flip over to silver. Take a look at silver this morning. Silver continues to make that same formation as gold. Your down move. This is, again, inside bar pattern formation. Generally, this resolves itself to the downside. All right. So again, in general, that's a bear flag or in spirit of bear flag pattern on the silver chart. Where is that support going to come in? Again, that 42 to 43 level really continues to be my target price where I'll start nibbling a little bit. And that's right in this range, right down here. You can see there's a lot of support. There's even upsloping or uptrend, up ascending trend lines that bring us right into that zone as well. You can see right here connecting these lows. And so that really gives me at least, listen, it's by no means would I ever go all in at that level, right, for a trade, but I would at least start nibbling. I'm a big nibbler, guys. It's one of those things where when I used to be younger, and we all started like this, and I want to be clear, folks, I didn't get to where I am as a trader by, just waking up one morning and being an expert trader and making money. Like, trading is hard. There's a reason why so few people can do it as a career, because it actually takes a ton of work. I would argue it's one of the hardest careers to be profitable in because you actually have to manage your emotions incredibly well. You have to get them so contained that when someone cuts you off in traffic, you just say, meh. Like think of all the things that annoy the heck out of us. And you have to just be like, you get to a point where you're just a stone wall. And it's kind of crazy to think like that, but that's what you have to do. And you have to just always say, whatever it is, what does the chart say? What does the chart say? And it took me years and years and years, right? So if you're in your beginning stages of trading or investing, it took me a long time. And my goal here, obviously, in my trading game plan is to educate so that your path is shorter than mine. My path was pretty long. I didn't have mentors. I didn't have YouTube was just like a beginning thing in fact, YouTube really wasn't even around when I first traded in 1999 to 2000, right? And so, I just had to figure it out on my own. And my hope is that I can help you guys, obviously, cut that learning curve. Now, listen, you're all going to take losses. Everyone takes losses. Show me a trader who's never taken a loss. I'll show you a liar, right? So, I mean, that's just the essence of it. Just be okay with that. All right, let's keep on going, guys. Sorry for getting off track there. But again, a few little things like that. Still watching this pattern. Oil is creeping down. Again, this inverse head and shoulders basically has 1 or 2 more days to start to turn back up. If it doesn't, this shoulder is going to be too large. One of the key metrics here is an inverse head and shoulder or head and shoulder should generally be symmetrical, right? And so, the left shoulder and the right shoulder can be a little bit of a different size, but you don't want them to be ridiculously different. Like, for instance, you don't want a left shoulder like this. Here's your head, and then your right shoulder is like this, right? I mean, that's not a human form at all. And so in general, this is getting a little long in the tooth for inverse head and shoulders to turn up. I still think it has another day or two to be within that symmetrical, semi-symmetrical zone. But I would say by Friday, if it's not making a move, then it's off the table, at least as that pattern formation. Okay. Lastly, natural gas and Bitcoin we'll talk about real quick. Nat gas here, folks. Again, all you can say is it was a breakout, and nat gas continues to stay relatively strong. Target remains right up in this range. Again, we're basically neutral today, but it's had a very, very nice move on the back of nat gas here. All right. And again, I still think the data center need is going to be one of the bigger drivers for nat gas. Would I buy it here? Nope. Look at the move it's had, almost vertical on the weekly. So there's no way I'm chasing it. Would I buy a retrace? Like, let's say here? Heck yeah. That's a classic setup retrace to the scene of the crime. Would I short a hit of this level? Probably. Yep. So notice how I have no bias other than that the chart tells me what to do, right? So if it retraces, I buy it. If it goes up here, I short it. And that's the same. That's how I treat Bitcoin. That's how I treat all cryptos. That's how I treat all commodities, right? Is like, they're vehicles for me to just look at. Okay, is there a high probability long or short here? If there is, done. If not, I pass. And I'm okay. There's sometimes when I'm in very few trades. Then there's sometimes when I'm in a lot of trades. But it has to be probability based. And I think that's so, so important. All right. Lastly, let's quickly touch on Bitcoin here as we come into the end of this game plan. Bitcoin here, guys, you can see it did have a bounce yesterday. Notice that the markets, what did the stock market do yesterday? It bounced. What did the stock market do the day before? It fell. What did Bitcoin do yesterday? It bounced. What did it do the day before? It fell, right? And so we still see Bitcoin generally trading as a risk asset with stocks. The only difference is it's much, much weaker because the stock market's still close to all-time highs. If Bitcoin was trading with the stock market, Bitcoin would be like right up here, and it's not. And so that to me continues to be a warning sign. We did tag this little area right here as support, right? So you got a little bounce. That's where we bottomed out, but I still think we're going down here. And then this will be a mega level for the charts, right? That will be a huge, huge level where the bulls and the bears will be tested. The reason why that's so important, folks, if you're a bull, is that it's basically the uptrend from the beginning of the bull market. I mean, going back to Bitcoin here and when it was 26,000. And so my point is that every time we've come back, the uptrend of this trend line has held, right? And so if we get to here and it holds, great. We're still in an uptrend. We're still in kind of the bull move upward. If this breaks at 93-ish thousand, that's very bad for Bitcoin. So I will be focused in and guiding you guys in this level. Absolutely. Again, I may even buy it as a long swing trade if it hits that level with my members of Smart Money Crypto, which is my swing trading service at verifiedinvesting.com. But again, I will be monitoring very closely in case we confirm below that level. That would be very, very negative for Bitcoin, crypto, and honestly, the stock market as always. One thing, last note I'll make is that in 2017, the bull market on Bitcoin topped. 4 to 6 weeks later, the stock market topped. In 2021, Bitcoin topped in November. 4 to 6 weeks later, the stock market topped. And so again, these are little things that I play with, looking at history, right? We want to guide ourselves from history to see if we can get an edge in the current day. Doesn't mean it's going to play out exactly as is, but it does give us an idea that something could be happening. Psychologically, people de-risk from crypto first before they dump their stocks. It makes sense, right? Crypto is still a little bit riskier, well, especially altcoins, much riskier than stocks. But again, it would make sense that people unload those first, or institutions do initially. All right, you guys have a great rest of your day. Thanks so much for tuning in, guys. I really do appreciate your time, your effort to come and show up every single day and watch this game plan. And that's why, like I always say, I'll bring my A game every single day to this My Trading game plan. Take care, guys. See you soon. Bye-bye.